Hey folks, so today we're going to be walking through how to set up a long-term rental purchase in Xero. Very important that we pay attention to assets and liabilities. Long-term rentals are buy and holds. You're holding that asset for hopefully a long time. So in that case, we're going to make sure to document all of our assets very clearly for capitalization and depreciation. So let's go ahead and get into it. I'm going to pull up Xero. First thing we're going to do, go over to accounting settings, and setting up our tracking categories. So we're going to go ahead and put this in first. That's the first thing you're going to do, because when you're doing the journal, you are going to put in this address on every line item. That's our fictional address, 104 Oak Ridge Court. Save that. Now we're going to go to accounting and then manual journals. New journal. Narration. We're just going to do purchase of 104 Oak Ridge Court, or whatever your address is, and we'll do long-term rental as the strategy. We're going to set this up for January of 2024, the 1st of January, so we have a clean record, because in future videos I'm going to show you other things such as property management, expenses, and as well as the rental income as well. So rent, whenever you get a rent check from your tenant. All right, and I have a sample HUD one that was created by Claude. So thank you, Claude, for this. First thing we're going to note, difference between the land and the building. The land does not depreciate, so we have to separate that out from on the tax assessment. So usually it's about an 80-20 split, so that's what I went with in this case. So $350,000 was the total contract sales price. $280 is the amount we borrowed for the loan. And the difference is the land. So the land is going to be this minus this is $70,000. So that's the first thing we're going to document, is the land purchase. We're going to put that in a separate asset account called land. Court. Okay, and that was $70,000. We are increasing the asset account, so it's going to be a debit. Second thing we're going to do is the building. If you recall, that was $280,000. Okay, because that's what's going to be depreciated. Okay, so next let's take a look at the HUD one. Let me pull that back up. Okay, so that was, let's go ahead and do capitalized closing costs, so things like title origination and attorney's fees. So we got our title charges, your settlement and closing fee, as well as the attorney's fees. We can do this quick math in our head. 2,500 plus 1,500 is 4,000. Next, we're going to do escrow. We'll look for any escrow. Okay, so this is from the escrow account. 233.34 plus 1566.66. Let's go ahead and do that math. It's 1,800. Very important we get this right, so always have your calculator handy. Make sure that you have in your chart of accounts that you have an escrow account there, because that's something that may not be there, and it's definitely not when you sign up for things like Xero. Let me make sure that we put the description right. So that's escrow. That was 1,800. Okay, next. I'm going to take a look at our borrowing costs. So what do we pay in order, not necessarily the loan, but the cost of the loan to take it out? So we have the origination fee and the appraisal fee, 1,700 and 500. So that's 2,200. And it's very important you pay attention to this, because some of these accounts are expense and some of these are not. This is a long-term asset, so since we're capitalizing this asset, we're actually, any loan costs are actually going to be amortized. They're going to be added to the loan asset and amortized over the life of the loan. Okay, so that's going to be 2,200. All right, so next we have, do we have any prepaid insurance? Prepaid insurance, yes we did. So it's 1,400 on that. So that should take care of all the debits that we have, because that equals what we just had seen as the total gross amount due. So 359,400 and 359,400. Okay. So now let's go ahead and enter the loan, the mortgage in this case. Took out a mortgage to finance the property. This is a long-term liability. If you're planning to hold this for the long term, and this is going to be a credit because we're increasing the liability account, so it's going to be a credit, 280,000. All right, and let's take a look at any cash that we use to purchase this property. Yep, we use 79,400. Now, since this is probably the last line item, I save cash for last. Typically, that's just what I recommend doing. That's my system, my routine. You can do it however you want, but that's what I do. 79,400, 79,400. Very good. So we are all accurate on our journal. $79,400. Now we're decreasing our cash. That cash is an asset, so that's going to be a credit. 79,400. So we're good to go. Let's go ahead and post this up. And you're done. So that's it. As far as the journal goes, that's the very first step in documenting your long-term rental in Xero. And next, what we're going to do is register the fixed asset, and I'll show you that in a separate video. But that's going to be really important for depreciation. Xero is really cool in the sense that you actually have set up like automatic depreciation schedules, and Xero does that for you. You just set it up one time, and then it does it automatically. You know, it goes ahead and journals that each year. So really cool stuff from Xero. And if you're ever stuck in a place and you are maybe you don't know what accounting software to use, again, I recommend Xero. That's what I use for my entire cash clarity system, and that's what works for my clients, and it'll work for you too. Trust me on that. Now, if you are a real estate investor or really any business owner and you're at a loose end, go ahead and go to laneledgercompany.com. Take a look at my cash clarity system, my offerings, my services, any tools that are up there. I just put up a cost segregation estimator and things of that nature. You can actually separate out your costs and speed up your depreciation. Very cool way to quickly take a look at how you can separate out your costs to speed up your tax savings. If you're looking for if you're looking for a standard bookkeeper, maybe I'm not your guy, but if you're looking for someone to implement, or really if you are looking for a bookkeeper and you don't have one, or you're doing this all yourself and you hate doing bookkeeping, you hate doing the books, let me know and I can help. The other thing is I have my cash clarity system, and it's a framework for very similar to Profit First in the sense that we are taking ancient truths and like the envelope system, and we're applying that to setting up your account architecture, to expense audits, to operating expenses, and all that is something that I do. And it all starts with knowing what your true profit is and working from that figure. So I can help with that. Go ahead and book a consultation at laneledgercompany.com, and I'll also put my link in there to book a call. And until next time, when we register the fixed asset, that's when you'll see me next. Have a good day.